everyone. Welcome to today's session. Hope you guys are doing amazingly well. Amazingly well. How about those for your Grammarly apples? All right, so just setting everything up here properly. Just making sure you guys setting everything up here properly. There we go. All right, cool. Alrighty, guys. Alrighty. Welcome to today's session. It's going to be pretty awesome. I've got a lot of good stuff I want to share with you guys today. I want to share with you the top strategies that work on any market out there. So, yeah. No matter what market you are trading, no matter what system you are trading, no matter what market you're trying to analyze, I'm going to share with you exactly how to analyze it and what to analyze, and really help you. I'm going to go over the stock charts. I'm going to go over Forex charts. I'm going to go over Bitcoin charts. I'm going to go over a whole bunch of wide range of down home country goodness charts, and to share that with you today. So the top chart reading strategies I'm going to share with you in today's session, guys, and I'm going to share with you exactly how to analyze the market and how to apply this to your trading. Again, we'll be looking at stock charts. We'll be looking at even the crypto market as well too, and we'll go from there. And that'll help you guys out when it comes to that. So I'll just give it a few minutes when it comes to getting seeing some people in, and we will start from there. So welcome everyone. Welcome. Let me just make sure that everything is working on my end here. All right, looks like we're good to go. All righty. So just give it a few minutes, and then we will get started. What you're going to learn today, guys, is the top chart reading strategies to help you get ahead in the markets even more. Oh, look at that. There we go. All right, cool. Or in any market out there. Alrighty, guys. Alrighty. So we'll just give it a couple more minutes to let people in, and then we will get started. Again, guys, I'm going to go over the top chart reading strategy you can start to apply right now. It doesn't matter what market you are trading, whether it's the Bitcoin market, crypto market, whether it's the stock market, whether it's Forex markets. What are the top chart reading strategies you can start to apply right now to start to generate a lot more uncertainty about what's going on in the markets and how to actually read what the markets are telling you right now in that. So alrighty, let's actually get started, guys. Before I do start, I must start off with the typical disclaimer. Guys, do not place a trade based on what you're seeing in this video here. This is just general advice only. This is not financial advice. And this here is to help you become a much better trader in the markets, and for you to become a much better trader, become a much better trader in general. Okay, trading is a difficult thing. Trading is a hard thing. Trading is risky. It's not an easy thing, right? It takes a lot of other things apart from a trading system to become a good trader, like discipline, patience, and all that sort of stuff. And all those things come together, trade management, to what makes a good trader. Okay, so this here is not financial advice. This here is just education only to help you become a much better trader. Let's get straight into it. All right, guys, so let's get straight into what I want to share with you today. Okay, now, again, I want to share with you two. Hey, Steps, Trader Zone, any time frame also? Yes, Trader. Yes, Trader. Trader Zone. Yes, exactly right. I was talking to you yesterday, Trader Zone, about this. That's actually one of the reasons why I'm doing today's session, is because, it's actually one of the things we're talking about yesterday. So I'm going to walk you through, doesn't matter what time frame, and we'll be looking at different time frames too, as we go along in this market. So, hey, Mr. Bling 007. All right, so what I want you to do is, when you're trying to read the market, when you're trying to understand the market, when you're trying to get a gauge of what the market is doing, it really does come down to what is the market ultimately telling you. Okay, so the very first thing we need to do is we need to be able to identify what is the market telling us. The market is always telling us a story. Okay, now there's two different types of things we can do here. Now let's actually bring this up here. Firstly, what I want you to do is I want you to bring up just a blank chart, and as you can see on my screen right now, I have just got simply a blank chart here of, it doesn't matter what market you're looking at. I'm looking at soybeans right now. I'm actually short. So I'm actually short. This is the SAYB, which is the ETF, the exchange traded funds with soybeans. And the thing is what I'm sharing with you guys right now, what I'm looking at with you guys right now is exactly, is exactly that. So by looking at the charts, the thing is this, guys, okay, we've got to understand that there is a couple of different things that the market can do. Okay, there's a couple of different things that the market can do. Let me just share with you those. Now, the very first thing the market can do is it can be in an upward trend. Now, in an upward trend, the market makes a high low, a higher high, a higher low, a higher high. Okay, so this is what you call an upward trend. Now, some of you guys may see this as basic, simple analysis that I'm about to walk you through, but it's the foundation to every single market out there. Now, in an upward trend, the market makes higher highs and higher lows. Now, the most important part to an upward trend is a higher low. So as long as the market keeps making higher lows, then the buyers are still in control. When the market is in a downward trend, lower highs, lower lows, lower highs, lower lows. Now, within that, in a downward trend, the market makes lower highs, lower lows. But the most important part to the downward trend, the most important part is the market making lower highs and lower highs. Okay. Now, again, guys, we're going to really dig deep into this, and I'm going to show you a Bitcoin chart with you in a little while. I'm going to share with the reasons why I keep saying people don't be buying Bitcoin right now, because it's not the right time. And every time Bitcoin rallies, it gets hammered because that weekly chart hasn't turned around, using this one simple basic foundation here. All right, so let's actually continue here. So lower highs, lower highs, lower highs, lower highs. But so that's the most important part. So the most important part to an upward trend is the higher lows and higher lows. The most important part to a downward trend is lower highs and lower highs. So, and then also but then there could be buyers in control, sellers in control, or then there's no one in control. Where the market makes high, comes down, makes a lower low, runs up, makes a lower high, comes up, makes a higher low, and it does this sort of action where it's going sideways. And that's where there's no one clearly in control. All right. So again, all this is doing here is helping us understand what's going on right now in the markets. Is the sellers in control? Is the buyers in control? What's going on right now in the particular time frame we're looking at? So it doesn't matter what time frame we're looking at. That's what it does there. So let's have a look at the other. Let's have a look at this here. Right now, we're just looking at a daily chart, but this could be any time frame. Okay, any time frame in the markets. So when we're looking at the markets and we're looking at any time frame in the markets, what we're looking at is we're trying to identify the highs and lows. So if we go right back to so I've squeezed my chart as much as I can here. If I go back to the end of this here, we can actually see, and this is just a simple basic analysis here. Let me just bring up this here. Okay, so what do we have over here? Okay, we have actually, no, let me do this. Let me bring up this here. All right, so what do we have over here? We have a low, then we have a high. Now as you can see, right, this is the major low, this is the major high. Now it's really hasn't made, you got a bit of a sideways action here, don't you? Like a little higher low, lower high. So very, very sideways action through here. So then what happens? It runs up, makes a higher high, and then comes down and makes a higher low. Somewhere from there, right? So Right now, and remember, right now in the chart that we're looking at, we're trying to identify who's in control right now. And the market can change. Just because it's in a buying mode doesn't mean it's always going to stay that way. So it's our job as traders to bend and mold and be flexible with what the market is telling us. So the market comes up, makes a higher high, then it comes down and makes a slight higher low. Runs up, doesn't break a higher high, does it? Comes back down, still creates another higher low through here. So all the way through here, we've gotten high, low, high, low, high, low. This point right here, what is this? This is the very first breaking of, actually, let me do this here. Let me take this off screen here, right? So what is this point through here? This point through here is the very first breaking of the low. Remember, the most important part to an upward trend is a higher low. So if the market is now breaking this is the very first break in the markets, which is a what? Which is a lower low now. This is the very first time, even back here somewhere, there might have been a little higher low through here. Higher high, higher low, higher high, higher low, higher high, higher low. Didn't make a higher high, did it? So remember, it's the most important part to an upward trend is the higher lows that the buyers keep pushing up. Then it made a higher low. This one here was what? This was a lower high. Does that mean sellers in control? No. Why? Because the higher low is still there. So the market's still pushing higher, pushing higher. Again, you can apply this to any market in any time frame. So then look what happened. And then it created what? Then it came down through here and created very first lower low. Very first. So the buyers are no longer raising their prices. So who's in control right now? Well, maybe the sellers are going to come in control, but what do we need for what do we need now for a downward trend? We need a lower high and a what? And also a breaking of the low. Right here is where this point right here. Let me actually take this off the screen here. So right here was where the market actually started to change trend. In this particular stock here, or this particular, doesn't matter what market you're looking at, right? So the market continued. Remember, in an upward trend, as long as the buyers keep raising their prices, so you may be getting lower highs, but if the buyers keep going higher, low, higher, low, higher, low, then the buyers are still raising their prices. The buyers are still raising the market up. So then the market actually creates this very first lower low, runs up, now creates a lower high, comes back down. So as you can see, right here when the market actually broke this significant low, right here. This is when the whole tune changed the market, right? So then guess what happened? Then we started going into sellers in control. Then we got a lower low, then a lower high, lower low, lower high, lower low. Now, remember, the market can change, right? The market can change. So as you can see here, right? So, and look what happened here. This was what? This point right here is now the point where it said, okay, if the buyers, if the sellers are in control, they're going to continue making lower highs, lower highs. And as you can see, that this point right here, when we actually broke up through here, gave a definite breakup, the sellers are no longer lowering their prices. Right. And so, but as you can see, guys, like what I'm identifying right now for you guys is a sideways market. Okay. We're going up, we're going down, we're going up, going down. It's a sideways market. And I'll get into what to do in these overall sideways markets in just a minute. But I'm just identifying you what's actually happening and how we can flow along with the market. What's actually the market telling us right now? Again, it's all about flowing along with the market. So now look at this here. Now the buyers have broken up and now breaking up. Now the sellers are no longer lowering their prices at this particular time. Market runs up. It creates now a major higher high. Comes back down, creates a higher low. Who's in control? The buyers. Right. So now you get a bit of a messy period through here. And again, I've just put up any market to analyze. It doesn't matter what market or or a stock you're looking at. Again, I'll bring up Bitcoin and stuff like that in a minute. But then the market came up, runs up. Very, very hard to say, but this one here would be the high. Then the market made a higher low. Then the market made a double top. And then the market came down, and then it started creating these creating this lower highs. Then it created a higher low, and then this one here was a lower high. So who's in control in this point through here? No one really, right? No one, because without what's the market doing? It's creating a lower high through here, and then it created a higher low. So at this particular time, as this market was forming this higher low, you're like, there's no one really in control right now. No one's in control. I mean, the buyers are not raising their prices, the sellers are not lowering their prices. Right now, again, guys, remember, I'm identifying when the market's going overall sideways. All right, overall sideways, and this is one of the reasons why this is one of the reasons why when I'm trading the markets, I'm always looking for a market when the market's clearly trending. And that's where, like yesterday, I talked about using a moving average to gauge that when the market actually breaks out and starts to trend. But when it starts to go through this sideways phase, I don't like trading that. I like the market when it's breaking out. But that's not what I'm talking about here. So I'm just showing with you, identifying the market here, right? So then guess what? Then the market came up, made a higher high. So who's in control? Buyers. Then it created a higher low. So who's in control? Buyers. Then it created a lower high through here. So who's in control right now as of this lower high? The buyers are still in control. Why? Because the buyers are still raising their prices from here, higher low, and higher low. So the buyers are still raising their prices. Oh, look what happened through here. What happened? The sellers actually broke it and now broke a what? Broke a lower low. Oh, so the buyers now remember, guys, this is all about identifying what's going on in the market right now with your stock or your index or your ETF or your Forex or your Bitcoin or crypto, or it doesn't matter what market. You're saying, okay, what's going on right now in the market? And how do I approach the market that way? Now, first, this is reading the charts. Secondly, you have your trading system. Okay. This is just about understanding the market a bit more. So as you can see, it made a lower low. Oh, look, the sellers are now breaking the low. This low back here was the higher low. Then it broke a low. Oh, what do we need now? We need a lower high. And as you can see, this little down bar through here, as it broke this down bar through here now confirmed the sellers in control. So if you were long on soybeans and you saw this, why would you want to be long? You wouldn't be. Why? Because the chart's saying, hey, hang on a minute, this lower low, lower high. And then we had the big sell-off. Then we had the big drop down. So as you can see, right, and us as traders, we can never trade based on what we think, hope, or fear. We can never know what tomorrow is going to bring. We can never know what's going to happen tomorrow. But all we can do right now as a trader, remember, guys, all we're doing right now is identifying what we can do. What we can't do is we don't know what's going to happen tomorrow. What we can do is identify what's going on right now in the markets and trade with it. And as I was sharing with you guys, that the market is always flowing, and the market's always telling us. All right. The market's always telling us what's going on and who's in control right now. And so as you can see, right, and what's happened right now in soybeans, now the market has started to break out, hasn't it? It's really broken out of this overall big sideways range. Now it's come down, made a low. Now it's come down and made a lower high. So who's in control of soybeans right now? Clearly, the sellers. Now, that doesn't mean the sellers are going to stay in control. This actually could end up being a little higher low through here somewhere. But does that mean the trend has changed? No. If the trend changes, what needs to happen? It needs to what? Break a high. Because remember, in a downward phase, when sellers are in control, when the sellers are knocking it down, in a downward phase, when the sellers are knocking this down, the most important part to a downward trend is the sellers keep making lower highs and lower highs and lower highs. So remember, and if the sellers do end up breaking back above this lower high, then the sellers are no longer lowering their prices. And if they don't break above this previous high, the sellers are still in control. It doesn't matter if we create a little higher low through here, because remember, the most important part to a downward trend is the lower highs and lower highs. And so there we go, and then the market flows through there. So no matter what market or what chart or what time frame you're looking at, guys, this is how you identify your what's going on in the market right now. Is you just look at the highs and lows, and the market is always telling a story, right? And as you can see, before this big sell-off in soybeans, you saw the chart, right? It created a very first lower high. So over here, this point over here right now would be a warning sign that the buyers are no longer raising their prices. So that tells you, hang on, if we get a lower high, firstly, if you are long in soybeans right now, you should be very, very cautious, because now the buyers are no longer the market is telling you the buyers are no longer raising their prices in this thing here. Then it came down and made a lower high, and then we got the big sell-off. So anyone that was caught long in the soybeans was just simply trading against the chart. We're trying to be smarter than the charts. The charts were telling you a story all along. So that's how you identify that. So, but what I like to do personally is when I'm trading the markets, I always like to look at the higher time frame to see what the bigger picture is doing. So let me erase everything off the screen here. And what I like to do is I like to go to the weekly chart, and the weekly chart is going to give me less noise, but the weekly chart is going to give me a lot more, say who's really in control right now, and so on and so forth. And that's where I look at this one here, right? I look at the weekly chart. Now, so basically that's how you look at the chart. Now, if I bring up, say a crypto, this is the soybeans market right now. So if I bring up, all right, so right now, if I bring up, say, the Dow Jones, all right, and let me bring up the Dow Jones, and I bring up the exact same analysis as I looked at, as I just said a minute ago, and we're looking at the weekly chart now. Doesn't matter if it's a weekly chart, daily chart, higher low, runs down, makes a higher low and a higher low. So as you can see, this big weekly chart right now, the long-term weekly chart, is having buyers in control. The sellers have no longer. You say, now did we get lower highs? We did here, right? We got a few lower highs through here, but did that change the overall trend? No. So again, when you're looking at the bigger picture, when you're looking at the bigger picture changing, you'll start to see the breaking of the lows and highs, like the, say, soybeans chart. What's going on through here? If I bring this up here, right, we actually had we had a high up here, we had a low, we had a lower high, we had a higher low, we had a lower high, we had a higher low. So who's in control right now on the overall picture? No one, right? Then it created up and then it went up and made a higher high. Then it came down, made a lower low. Who's in control? No one. Now it's making a lower high. So as you can see, right, it went from no one in control for a while to now clearly someone in control right now, breaking through here. Because remember, that weekly chart is always king on that bigger picture, right? When that weekly chart starts to change, it's telling you what's going on. So don't fight it. Expect, like this here, low, high, lower low, lower high. This was here. This was actually a slight higher high, wasn't it? Slight higher high. But look at this here, lower high. Remember, lower high, lower high, lower high. Oh, look, market ran up and break a high. As you can see, right, this point through here was when the market broke through that point through there, the buyers the sellers are no longer lowering their prices right here. So you can see the market actually broke back up and now created a what? It created a higher low. So who's in control right now at this point right here as the market starts to break up? The buyers, right? So as you can see, this is when the market actually started to change. It started to change its tune when that happened. All right, so that's when the tune started to change. So if you're looking at that, that's how, if you're looking at the big overall picture in the markets, we need to identify this and always just always flow along with what the market's telling us, and not us trying to be right with the market. Just like, hey, what are you telling us, market? What's going on right now? And so if you're looking at the Dow Jones and you're looking at the weekly chart once again on the Dow Jones, you'll be able to see higher low, higher low, higher low. And until the market breaks those higher lows, we're not going to get a crash. Now, if we're looking for weakness in the market, we go back to over here. All right, we go back to over here. And if I take everything off the screen here, and if you look at it, now remember, that's the weekly chart there, right? And I'm going to remember the weekly chart, because the weekly chart is so important for, if you're looking to buy something and hold it for many years, you want to start seeing at least some change. Doesn't mean it's always going to stay that way, but to be on the right side, you want to look at the weekly chart. Now, the daily chart, what is that all about? The daily chart is obviously, the one that we should be looking at. Let's go look at the S&P 500 here for a minute. And let's go have a look at what the actual market was telling us through here. So we can see that the market did what? The market had a major high, then it had a major low, then a lower high and a higher low, then a double top, then a what? Then a lower low. Then it created the lower high. Interesting, right? Now it looks like the sellers are starting to come into control. It looks like the sellers may be knocking it down. And then it comes down and makes this higher low. And then as you can see, right, this point right here is when the market what? It was this point right here when the market overall changed its tune right here. It changed its tune. So, okay, now we actually just created a higher high. What does that mean? That the market is now changing, came down, created this higher low through here, then a higher high, then a higher low, and then the market took off. So right here at this point right here is when the market said, hang on a minute, we were actually stepping down, but now we're not. And this is where, guys, like when I trade the daily chart, I always make sure that if I'm trading the daily chart, I don't trade against that weekly trend. Because if that weekly trend is still pushing those higher lows, that big, massive weekly trend, as you can see, the most highest probability trades have always been on the upside. And trying to trade these short-term counter trends and pullbacks against that. Right? Against that. That's where things can really go wrong in the markets, and it can really be detrimental to your trading. And if you want to talk about probability in the markets, probability is all about just make sure you're trading with the trend. Now, if you go look at that's the S&P. If you go look at the Dow Jones, who's in control right now on the Dow Jones? Let me take everything on the screen here for a minute. So who's in control of the Dow Jones as we speak right now? If we're looking at the Dow Jones, low, we had a high, we had a higher low, we had a higher high, we had a higher low, we had a higher high. Look at this here, lower low, higher high. Hang on a minute. So who's in control right now? No one, right? No one. No one is in control of the Dow Jones right now. It's what is it? It's sideways. There's no one in control. Lower low, higher high, lower low, higher high. No one in control. The S&P is still pushing higher highs. The Nasdaq is still pushing higher highs and higher lows. What does that tell me? That tells me, and for me, the Dow Jones is the leading of the overall markets there. All right. That's what I personally believe. If the top 30 stocks in America right now are really, there's no one really in control, create these lower lows, lower highs, there's no clear pattern, then something else is about, something's not right. All right. There's a bit of confusion. There's no clear direction. Now, if we do get a bit of a pullback through here and we create a higher low, and then we break back above this high through here, who's in control? Buyers. And if that happens, and if we break past this previous high and we do create a little higher low through here, then what's likely to happen? We're likely to run resistance level, which is up there. But right now, the Dow Jones is like, there's no one clearly in control of this. So remember, guys, use this analysis, and no matter what, and there's so much you can learn from the chart itself. And the more we can just identify what's going on in the market right now with the charts, the better trader will be. Remember, always go back to that weekly chart. What is that weekly chart telling us? Because remember, if you go back and have a look at the election where everyone was saying the market was going to crash, remember this point right here, this is where the election was, this up bar through here. Okay, what was happening at that time of the election? Low, higher high, higher low, higher high, higher low. What happened? High low. As of the election, it actually broke up. It actually broke up. And as this remember weekly chart started to turn around, there was no reason, because the buyers are raising their prices. There's no reason to think the market was going to crash that time. Now, yes, we could possibly go down because there's no certainties in the markets. That's why we need to have a stop loss in place, not trading too much of your account at one time because there's no guarantees, et cetera, et cetera. But remember, this is all about probability. And the probability comes from what the market is telling us what's likely to happen. And then you can see the big market, then the market moved up massively from there. Okay. Now, before I move on to the second strategy of what I'm about to share with you, I want to share with you the Bitcoin chart here right now. All right. And the reason why is because I want to share, so many people use this on the cryptos, use this on any market out there that you're thinking about. But if you're looking to trade cryptos, if you're looking to trade anything long-term, if you're looking to trade silver and gold long-term, if you're looking to trade the gold stocks long-term, if you're looking to trade any market out there long-term, please use this analysis that I'm sharing with you right now. And I'm going to share with you exactly why on Bitcoin, the sellers keep coming into the price. And nothing's going to change until this, is Bitcoin coming up now? Let's actually see if we can get, let me see if I can get Bitcoin. And nothing will change until I can get Bitcoin chart up. and then we can start doing something. All right, so let's actually go through here. Let's go through this. Let's go through this candlestick chart here. All right. Now remember, when we're talking about Bitcoin, and we're talking about what's really going on with the markets, and remember, always look at that higher time frame. So if you're trading a daily chart, always trade with that weekly chart. If you're trading a 60-minute chart, always trade with the daily chart, with the trend. If you're trading a 1-minute chart or a 5-minute chart or a 15-minute chart, always look. Or no, if you're trading, say a 15-minute chart, then always look, say, for the 60-minute chart for the trend. Now let's actually bring this up here. Now this is Bitcoin right now on a 15-minute chart. You can see there's lots and lots of things happening. This now here is a Bitcoin on a daily chart. Now hang on a minute. Why is it that every time the buyers come in and it looks like the buyers are about to take this to the high side, why is it that the sellers keep coming in? Is there something that people don't know? Is there something that we can see firsthand to say, okay, this is why the sellers are likely to come in? And the answer is yes. What is that? That's the weekly chart. So let's go down to the weekly chart and we can see what's been happening on Bitcoin and the cryptos. What's been happening through here? Let's actually bring this up through here, right? Now we can see here, right? We can see back here. Now let me actually, before I do that, let me go back in time. I'm going to go back in time through here. And I'm going to share with you what was actually going on before Bitcoin actually exploded. All right, let me actually open this right up. Now, if I'm having a look at Bitcoin, if I'm having a look at Bitcoin right now, what was happening through here? We had a low, then we had a high, then we had a higher low, big upward candle, breaking of the high. Remember, this is weekly chart, by the way, now, right? Weekly chart, higher high, higher low, market runs up, makes a higher high, higher low, higher high, higher low, higher high, higher low, and then that's when the market really took off. So as you can see, Bitcoin on the weekly chart was making higher highs and higher lows all out. There was no need to try and short it at that time, was it? Now, if I go back in time, let me go right back in time here for a minute. As you can see, when did Bitcoin change its tune? Because there was a while there, right, when the market actually crashed. When did Bitcoin change its overall tune? Let me share this with you here. When did it change its tune? By looking at the overall. So we can see here, look at this here, low, major, lower, low. This is back in 2014. Lower high, come back down, lower low, lower high, lower high. So who's in control right now? Sellers. Higher high, higher low, bit of a higher high through here. And now we have what? Now we have a basically double bottom. So who's in control right now? No one. But who's been in control this whole time? Lower high, lower high, lower high. So this big long-term weekly. So people that are trying to buy Bitcoin all through here and all trading against the overall trend, they're trading against the movement. Don't trade against that. When did it change? It changed when we started breaking a. Then we came up and made this higher high and higher low. And when the 40 this 400 mark, that's the weekly chart trending. Let me now let's actually see when did let's actually see when did we actually get that breakthrough on that weekly chart. There we go. That was the up candle, wasn't it? So this was the up candle that we looked at. So as of this point right now, who's in control of this overall big long-term crypto market? The buyers, because it's now made a higher high, high low. We went sideways for a while, which, by the way, this is actually a setup for me that I like to trade based on pullback with small bars, trading with the trend and the bar that stands out. This is a beautiful setup for me. Weekly chart setup. So if I'm looking to trade market, this is actually the type of setup I'm looking for. Sideways market, small bars, and then a bar that stands out, or a candle that stands out. But I'll talk more about that a bit later on. So as we can see right now, we can see the market's going overall sideways here, isn't it? It's gone really, really, really sideways through here, and then we get an upward candle. People that are still bearish on Bitcoin right now, what are they doing? They're probably likely to get slaughtered. And look what happens. Market continues. So we had a what? We had a higher low. So the point right now, can I do any more drawing on this thing? How do I draw? How do I draw? You click a button, John. Let's go. Where's these little drawing tools things? Pitchfork. No. Rectangle. Balloon. No. I know I'm going to get something through here. Or anyway, I'll just do a line. There we go. That'll do. I'll just do a big thick line. There we go. All right. So we had a low, and then we had a high, breaking on the previous high. Now we had a higher high. So for this tune to change, meaning that the overall Bitcoin chart, is now likely to change. What needs to happen? It needs to what? Go down through here. Oh, geez. Look at that. Right. So that's what needs to happen, doesn't it? So can I take this off? How do I take this off? All right, there we go. Cool. All right. So, and look what happens through here, right? Then the market pulls back through here. What's happening right now? The market is what? It's creating a potential higher low. And so now look what happens. Now we created what? Now we created through here. Oh, look at that. I just figured out how to use this thing. Then it created a high low. So who's in control right now? Buyers. So if you're a long-term buy and hold and you saw this, what would you be doing? You'd be what? You'd actually be bringing your stop here. Your stop would actually be probably back. Your stop as this market was going through here, right? Remember, if you're trying to capture a move, you must expect the market's going to run for you, then pull back, run for you, then pull back. So where would your stop be if you're looking to say buy Bitcoin at this time? Your stop would be, say you bring your stop to above break even. So before, so you wouldn't lose on any money. You're not taking profit into a loss. Then the market comes up here. Then the market comes up here. I'm just gonna use the cursor here for a minute. Then the what? Then the market comes up through here. So you bring your stop to here. And then the market comes down, gives you another higher low. Then you bring your stop there. See how you're locking in prices as it goes along. So if you're looking to buy a stock or buy something, follow along with the market. Now, no, it's not going to happen all the time. You might get a big run up, and then you might get a big drop down. And then that may be the trade. That may be the trade over. But if you believe something has long-term legs, it's going to do this. And then the market runs up. Where's it run up to? It runs up to the high up here. And then you bring your stop down, and then you bring your stop to the higher low. So as you can see, you're locking in prices. The market absolutely just explodes, doesn't it? Absolutely explodes. But look what happens. Now it brings in what? And this is you just sitting here, and now you bring in the stop to the low of the bar, higher low. And then what happens? Then the market creates another higher low. So year after year after year, this is all you're doing. And then the market continues up from there. And then we bring this up through here. So then the market continues up. Now remember, and then you bring, so where was the next higher low? It's probably around here, right? And that's where you'd get tagged out. So from basically $1,000 up to $1,100 is what you would have caught and captured in a market like that. So let me see can I delete everything on the screen now? Did that delete everything on the screen? No, it didn't, did it? No. All right. So as you can see, right, like if you're looking to long-term buy and hold something, wait for that weekly chart to turn around and then start to use good stock management and see what it's got. Right? See what it's got. Be patient, use long-term stock management and see what it's got. But wait for that weekly chart to turn around first. Now, again, make sure you have a good system in place. Like even if I'm trading the weekly chart, I just share with you what I look for on the daily chart, right? And whether I'm looking on the daily chart or the weekly chart, I still look for my setup. But let's have a look at let's have a look at what the Bitcoin market is doing right now as we speak. What is Bitcoin doing right now? Again, this doesn't matter what market you're looking at. Remember, we use this exact same analysis on the Dow Jones. What is the crypto? What is the? It is what? This was the low. Oh, I'm going change color here. This is the what? This is a higher low. This is a lower high. As you can see, right? As the crypto market, as the Bitcoin market, right? Doesn't matter what market you're looking at there. As you can see, as Bitcoin started to break this low through here. What was that? What does that mean? The buyers are no longer there on the prices. High, low. Now look what happened. It came through here, then a lower high, then a lower low, then a lower high, then a lower low, and now recently it's now made another lower high. So Bitcoin has always been in a downward trend. And I know this sounds simplistic, but if I'm looking to buy Bitcoin for long-term buy and hold, if I'm saying, okay, Bitcoin's now likely to take off in another big bull run, guess what I would want to see first? What was happening back here? It was making high lows, breaking of the previous highs, as I shared with you through this session. Guys, give me a thumbs up if you're finding this really, really, really valuable. Give me a thumbs up or give me a yes in the chat box if you're finding this really, really valuable to understand when you're trying to buy even gold stocks, right? Or even if you're looking to buy some of the crypto market right now. And it doesn't matter what market, out there you're seeing, it doesn't matter what market out there you're trading. Use this simple analysis to change things for you, to put the odds on your side, to put the odds on your side even more for you to start to start to do better with your trading, with your analysis, and with the way that you're looking at the markets. So right now, as we see with Bitcoin, the Bitcoin market, the Bitcoin market, right? Bitcoin market is doing what? It's creating another lower low. So who's in control? Still majorly in control. Sellers. Sellers have been in control. Lower high, lower high, lower high. They haven't changed. And if Bitcoin breaks this 6,000 mark, guess where it's likely to run to? It's now likely to run to the next what? Next resistance level. Now, where is that next resistance level? As you can see, that the next resistance level, style. Oh, is that? Or the next resistance level is around here somewhere. Right. So we're now likely to, if we break the 6,000 mark, we're now likely to probably head down probably around about the 4,600. And potentially the support is actually, support is actually down just below 4,000, the next support level. We may get a little bit of resistance up the top here, but there's another 1,000 or so point drop. So for me, yes, I want to buy cryptos. I want to buy some XRP because I think that's one of the best ones out there. That's just what I think anyway. But I'm not going to buy it just because I think it's a good idea. I'm not going to buy gold because I think it's a good idea. I'm not going to buy silver because I think it's a good idea. I'm not going to buy any gold stocks because I think it's a good idea. We want to make sure we're trading with that weekly trend. We want to make sure that we are trading with that weekly trend, and we're trading no matter what happens. We make sure that we continue to move forward in a way where we continue to go with that overall trend. So if I remember, guys, if I'm trading a daily chart, I'm always looking to make sure that I'm trading with that weekly trend. Now, if I look to get in on a daily setup and the weekly, if I look for a daily, if I'm getting on a day, this is why I talk about probability, right? The probability of something happening. If I look to get in on a bullish daily setup and the weekly chart is in a downward trend, then that has a very low probability chance of actually working out. If I get into a bearish setup and the weekly chart's in an upward trend, guess what? No. So everyone out there that is still trying to pick the bottom in Bitcoin, they are risking that they're just hoping and praying. Now, on the daily chart, yes, you're going to get what? You're going to get short-term little upward movements and so on and so forth. And if you wanted to trade that way, like you trade what I call like a short-term move, right? Like you're basically going to trade it, get in and hold it for a couple of days or whatever, and then get out, then that may be what you're looking to do. But if you're looking to long-term buy and hold, don't be fighting that trend. I know it sounds simplistic, but don't. And again, the weekly chart is always telling us. And it looks like it's actually building a bit of a base through here right now. So we may be getting ready for another big drop to the downside. So everyone who says that crypto market is going to form a bottom and it's going to go to the moon and it's going to explode and all that sort of stuff, there is nothing in the markets. And right now, because they're trying to pick the bottom, do not pick the bottom. Do not try and pick the bottom. The most highest probability way for you to get in, if there is going to be another big run in Bitcoin, guess what it's going to do? It's not people so fearful of missing out, so they're trying to jump in now because before this thing absolutely just takes off. That's not what it's likely to do. What is it likely to do? Firstly, it's likely to break a previous high, right? So first, we're likely to break a previous high. If it holds here, if say for example, Bitcoin holds here and rallies up to say here, say 11,000. What does that mean? That's now a change in trend. Then if it runs back down through here somewhere, starts to base out a little bit, and then starts to rally up. Now what is that? Now we got a low, high, higher low. If I was looking to buy Bitcoin, I'd look to buy Bitcoin through here, so it's a small stop, and then look to enjoy the ride up. if you know, and then again, I use my stop management, or I might just use the high, the low of the bar, which simply means let me just bring this back here. If you know the if you know the if you know the Bitcoin chart and so on and so forth, you could, as I said, again, you could use the low of the bar. So if you got into, say, this point through here, low, 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 low of the bar. Oh, look, you got tagged out. If you got into this bar here, low, 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 low. Oh, look, you got tagged out. So you could use the low of the weekly bars, low, 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 low. Oh, look, you got tagged out there before the pullback. So you could use the low of the weekly bars if you're looking to not, if you don't want to endure the actual the major swings up, the major swings down, which, as you can see, right, can take sometimes a month or so before it goes for another run, then use the low of the weekly bars. Right. And yes, you won't be capturing the big moves, but again, if you're looking to make sure you do that, then just scale up there, right? And then once you get tagged out, as soon as it breaks the previous high, stop below the low, stop below the low. Oh, look, bam, done. Stop below the low, stop below the low, stop below. Oh, look, tagged out. It's all about probability, right? It's all about using the probability. Please do not try and fight this trend. Do not try and fight the crypto market. Do not try and fight any of those markets. So I did want to share with you another, I want to quickly share with you guys another thing that I want to share with you on the gold market through here, because I think it's so important to understand what's going on. And it's so critical to understand how the markets work and the phases we go in and so on and so forth. What tends to happen with these markets, right? What tends to happen with the markets is the market goes through what I call a price and time phase. Okay, so when we're looking at the markets and when we trade in the markets go through what I call a price and time phase. So the price and time phase when it comes to the market is that essentially this. If the market spends so much time, i.e. the overall chart's gone sideways. All right, let me delete this thing here. If the market spends so much time on the charts, again, like you can see here with gold here, when the market goes sideways for a long time, when we do eventually get the breakout, then we're likely to have an extended period of run, maybe for a few weeks to a month or more, depending on the length of the sideways movement. And when this actually happens through here, right, you can see this big breakdown bar through here. Then it went sideways for a long time, and then you got this breakdown bar through here. Whenever the market has a long period of sideways movement, a long period of extended sideways phase, whenever that's happening, the market will go through phases. It'll go through a run, it'll go through a pullback, it'll go through a run, it'll go through a pullback. And and I also use this in the Dow Jones as well too. Let me bring up this line chart here for a minute on the Dow Jones. Let me bring up, say, the weekly chart here. And as you can see, right, like the more time the market goes sideways, the basically the longer the the longer the movement is likely to happen. Now, what I mean by that is, as you can see, right, what was happening at the election time? The market was sideways for many years. So if you're looking at it as a basic thing, right, if the market is sideways for many years and then it breaks out, guess what? Now, because the market did a lot of time when the market was just resting. When the market rests like that, when it goes sideways for quite some time, you can see this on any market, right? When the market goes sideways for an extended period of time and then we get a breakout, you can expect a decent run in that direction for quite a number of time, or quite an extended period of time. So you can see here, right, we basically had, I would say this is basically about 2 years worth of sideways movement. No wonder we had at least 1 year of good upward movement, because we had 2 years of rest. This is like refueling. This is like you go into the gym and you spent like a week off just rejuvenating, refreshing, clean the body, etc. Make sure it's all ready to go. And then suddenly, bam, you're at the gym. Now you can go for another few weeks, right? Because now, boom, you're gone. But if you've been going and going and going and going and going and going and with very little rest, guess what happens? Now the body needs a rest. Guess what happens with that? Then the market has a pullback. Look at this thing through here. Sideways overall for at least a year, and then we went for a year run. Sideways for a couple of years, and then we went for a year run. So this is what happens when the market goes sideways. So the question is right now is, are we going through one of those phases right now where we're now likely to go for another run? That's where focusing on the daily chart, the daily charts will start to tell us what's happening right now in the market. As I'm doing this session for you guys anyway. So continue to look at these things. And all these tools is a way of adding probability to your arsenal, as a probability to the way you are trading the markets. And this is and as you can see, right, there's nothing to do with volume. There's nothing to do with moving averages. Now I can teach you a lot about volume and moving averages. Right? Volume is key and moving averages are key because it gives you momentum in the market. Now, what I mean by that is this. Let me just bring up here. Let me bring just one moving average up through here. Let me bring up now a weekly chart. And let's actually do this thing through here. So when the moving average is flat, guess what? You don't want to be doing it. You don't want to be touching anything. So for me, when I'm personally trading the markets, I use this more on a daily chart, but I'm using it on a weekly chart as an example. Which is pointing up, guess where momentum is? Up. When the moving average is pointing sideways, guess where momentum is? Sideways. When the moving average starts to point up, guess where momentum is? Up. And the momentum right now is still up. So traders, it's so important to, as you can see, right, so important to try to understand what is going on with the markets right now with whatever, it doesn't matter what you're looking at. I just looked at gold. I just looked at the indices. I just brought up Bitcoin for you as an example. Doesn't matter what market you're looking at. Please use these things to start to stack the odds on your side and stop trying to pick the bottom of the markets and having this FOMO. People fear of missing out. People trying to short the market right now because they think it's at a top. There's nothing on the chart to tell us that. They're trying to outsmart the market. And I promise you guys, doesn't matter what market it is, you can never outsmart the market. And if the market is not saying, hey, we're rolling over now, we're creating a lower low and lower high, or at least we're breaking a low, then the sellers are still in control. What I mean by that is sometimes, I think it was 1929, what happened, it ran up, then it made a higher low, then a double bottom, then a double bottom, and then it broke. So it actually then broke a low. And then we had the 20% crash in one day, but it actually broke the low first. I think that was 1929. Maybe it was 1987. It was one of those crashes. I remember I was looking at the charts. That's exactly what happened. It broke the low first and then it had a drop down. But you can see we're actually lower high, lower high, lower high, breaking of the low, and then the market had a pullback. Until this starts to happen, until we start to get some sort of rolling over period, we're not going to see a big crash. We're not going to, it's just not going to happen. Now, I shouldn't say it's never going to happen because anything can happen in the markets. We know, guys. We know that, right, guys? It's so important to make sure that you're doing these things to really, really, really help you guys out and to trade at the end of the day smartly. Trade with what you see, not what. And at the end of the day, as I said before, and as you can see from these charts, just because the buyer's in control right now doesn't mean next week the whole tune can change. And so what we can do as a trader is to trade what we see right now, not what we hope for, and only trade with good risk management, good money management. And that's the reason why there's a probability in everything. That's the reason why a large of the trades, if you're trading with the trend, are likely to be profitable because you're trading with the trend. And obviously a smaller percent of trades are now likely to be that as well too, which is now obviously a small percent, maybe 20, 30% of trades are likely to be losers. And again, just depends on your success there. I know right now, I know with my system, if I wait for really, this is talking about really good, clean setups, I get up to about 90% success rate in the markets. But that's a really clean setups. I average around 70 to 80%, somewhere around about there, because I take clean setups and then I also take the ugly setups too, but they still meet my rules. But that's what I see, and that's what I get. The only way I screw my win-loss ratio up, guys, is when I don't follow some simple rules that I'm telling you right now, and I try to fight the market. So with that being said, guys, let me actually get into now some Q&A. Let me answer some questions for you, and I will be on my way because I've got a few things I need to sort out here. Guys, if you guys are liking this sort of stuff, make sure you go to freewbstraining.com, freewbstraining.com to get your free trading course, where I talk a lot more about this. I talk about the biggest mistakes, the chart reading techniques. All right, I teach you different trading systems and so on and so forth to help you, guys, moving forward there. So let me now continue on through here. Let me actually now go back and see if I can answer any questions. If you guys have any questions right now, please put them in the chat box and I'll be gladly help you out for 5 or 10 minutes or so. Then I need to head off. Yeah. Who is in control tomorrow and next week? Sellers. Who knows what's going to happen next week? No one knows. All you can do is trade with what you see. Debt crisis evolving. Debt crisis has been evolving for the last decade, or new high. Just follow what the charts are telling you. Pablo had to go. Fantastic. Hey, Mr. Bling. This is gold. Thank you, John. No problem. So Bitcoin 4,000 many. It could possibly actually a bit lower than 4,000. It may be going even lower than that. Don't be trying to FOMOing your way into these crypto markets that are doing that sort of pattern on the weekly chart. Wait for it to turn around. Don't try and pick the bottom. Don't try and pick the bottom 20 the bottom 20% of a big bullish move, and don't try and capture the top 20%. What simply means wait for the market to turn around and then jump onto it. Much more high probability with good stop management, good risk management, because you just never know which one. Hey, John, can you review the IYR on the indices for the daily, weekly charts? Thanks. IYR. What is that? All right. So really, right now, no one's in control on the weekly chart, the daily charts right now. So daily charts are still creating higher lows and higher highs. So if I'm looking at this, and let me bring up, say, 1 year worth of data. If I'm looking at this right now, we're doing high, low, high, low, high, low, and higher low. So buyers are in control right now on the short-term time frame charts. They, as you can see, they continue to raise their prices. You can see here, it made a lower high, lower high, lower high, lower high, low, higher high. Then it what? Then look at this here. This here, then when it broke that high there, and then it created a higher low. Look at that there. Look where the market changed. Then it started creating high lows. Higher lows, nothing through there, and another high low. Is there going to be another high low through here? Well, if there is, then you're probably going to continue breaking up. Now there's a lot of resistance up here. Now, if I'm bringing up, let me bring up the weekly chart now. And if I'm looking at the overall weekly chart, the big picture time frame, there's no one really clearly in control. And as you can see, right, like when the market actually got to the resistance, that's where it's having a lot of problems right now on the IYR. So long-term buyers in control. Just because the buyer's in control doesn't mean you buy it, guys. Okay, it's so important. What I'm teaching right now, guys, is how to read the chart properly, not a trading system. What we're doing right now is we're just reading the markets. A trading system is completely different. A trading system is okay. Now, right now we're just reading what the market's telling us. A trading system is okay. Here is my trading rules to get into the market based on this trading setup. Not just because the market's making higher highs, higher lows, or you know what? That may be your trading system. You may form a trading system around that, but have the same sort of rules every single time. So this one here, Let me erase all. So this one here, we actually created a low, very, very messy through here, wasn't it? Little high, low, high, low, higher low, possibly lower low, higher high. Looks like it's making a bit of a double top, so I definitely make a lower low. So there's really no one in control of this chart right now on the short term, but the daily chart is definitely through there. So yeah, 99 silver. Hey, using what you are explaining, what do you expect for high low heckler mining, HL heckler mining? All right, let me actually just, so HL. Well, firstly, I don't expect anything to happen because you can, when you get into a trade, remember, not any given one trade is going to be a successful trade. You're not going to have 100% win-loss ratio. So I'm going to start with that before I actually look at this. HL. Well, firstly, the HL's been a big, massive downward trend. So, yeah, that's simple as that. Lower high. Look at this here, right? This was a low. This was a higher low, then a higher low. Look at that there. It broke what? It broke the lower low through here. Then it came down, then it made a lower high through here. Then came down, made a lower high, lower high, lower high. So if I was buying this stock, I wouldn't be buying this right now. When would I want to try and buy it? When it starts to break a previous high when the market has been selling down. If I was looking to buy it. Now, again, even if I am looking to buy something, I'm looking for the market to turn around. And it's so important that you understand that even though the market is turning around, doesn't mean the market's going to start into a big bull run, right? Because what can happen sometimes, and this does happen, and you got to expect this, that you may get into here, buy it here, and then the market then just suddenly turns around, changes the mind, and you get stopped out. You know what? That can happen. Actually, you know what? It's probably going to happen at least 20 or so % of the time, sometimes more. So just make sure you're smart about that. It's all about probability, not certainty. Understanding the win-loss ratio, that some of your trades are going to be part of that loss ratio. The trade you're taking right now today could be part of that loss ratio. You need to accept that fact. Hey all, I'm asking myself if we're seeing a broadening top. Oh, well, we'll see. Dusty, based on what I'm seeing right now, we could be making a broadening top, but there's nothing on the chart to say that. So just follow along with what that chart's telling you. WTI, silver. It was like WTF. WTI. All right. So what's WTI doing? It's doing what? Let me actually, for this weekly chart here. So WTI is in an upward trend right now, but it's having bullish on oil or bearish? Many, based on what you're seeing in this session, why don't you go have a look at, why don't you go to the chart and see what you see based on what you're seeing, what I've told you in this session. That's the only way you're going to get much better at it, is use what I'm telling you right now and then go have a look at it for yourself and then see. Don't wait for me to tell you. But when I'm looking at this one here, higher low, higher low, higher low, and now create another high low through here. So, but we could be getting ready to break that low, create a bit of a double top through here. So as you can see, right, I struggled to break that high, and then it's now breaking back down. So short term, yeah. Short term, we could be getting a little bit of a pullback here right now, because it didn't break a new high, and it's possibly now breaking a new low. So it's going through a bit of a sideways movement right now, as we speak. So yeah, a little higher high. So basically, it's gone through now what I call a time phase. Now let me actually just share this with you here for a minute. Let me erase everything off the screen here. Now, what I mean by that is that, remember, the market goes through phases, right? It goes through a resting phase. It goes through a resting phase, and then it goes through a movement phase. And so, as you can see through here, so you can see that this bottom through here was what? Was when the market was resting, and then we started to break out. Generally, when the market breaks out, it's going to give you 3 major stair steps. 1, 2, and then the third step is more like the last push. Sometimes that happens. It's not all the time, but it'll give you a bit of a third stair step. And sometimes on that third stair step, and let me share this with you here, right? So high, first stair step breakdown. This one here was the second stair step. This one here was the third stair step. Actually, no, correction. Market was in a sideways movement through here, as you can see. Then it broke down. First stair step, second stair step in the phase. Third stair step. This one here is when it, what they call petered out, or started to actually exhaust itself. 3 major stair steps after it goes sideways. 3 major stair steps after it goes there. So we now be getting ready for a sideways movement right now and building up a bit more fuel, a bit more energy in the body, so to speak. So as you can see, and now these 2 different phases are what we call price and time. Where are you in the market you're looking at, right? So this is a time phase where the market's gone sideways. Then when it breaks out, now we're likely to go through 1, 2, 3 movement, then a sideways phase when it breaks out. 1, 2, 3. So we're sideways here, right? So we could be getting ready to drop back down through here right now. But now we're just going through a sideways phase. Where's it going to break out? I don't know, but it's already done that. And you can see that on the gold chart as well. You can see that a lot actually on the gold chart. What has the gold chart done? As you can see very, very, very clearly on the charts, it went through a sideways phase. Stair step 1, stair step 2. Hey, wrong one. Stair step 2, and then also stair step 3. Right, so stair step 3. So, and then so therefore, right now, that's where I believe we're starting to get towards the end of this downward move. Why? Because we went through this sideways phase through here, didn't we? We went through this sideways phase through here, and then we started to break out. And now, since we started to break out, 1, 2, 3 stair step. I think Charles Dale talks about that. You know, every phase has 3 stair steps. And then, so that's not all the time, but if you start to notice that, the very first and the second stair step is very high probability that the trend is likely to continue. Once we start to get onto the third stair step and more, it could possibly be exhausting itself. John, some explanation about combining timeframes, please. All right. So the thing is that when you're combining timeframes, is this menu, this right? So for example, when I'm trading the daily chart, menu, I think that is, when I'm trading the daily chart, I'm always looking for my entry signal. Okay, I'm always looking for my entry signal. So I'm looking to trade with the trend. I'm looking for a pullback. I'm looking for all these different things to meet my trading rules. And I know exactly what I'm looking for. All right, very, very simple, very, very basic, but very simple. So I know what I'm looking for on that daily chart. Okay, so I'm looking to make sure I'm trading. So for example, Manaru, if the market's making higher highs and higher lows, and I get an entry signal on the daily chart, but then suddenly I realize this upward movement through here really is this section through here, then I realize, hang on a minute, the overall sellers are in control. Right? The overall sellers are in control. So therefore, I wouldn't want to be taking that. Why? Because the overall, when you talk about combining timeframes, right? When you're talking about combining timeframes through there, let me see if I can do this here. Oh. Yeah, all right. So when you talk about combining timeframes, Minoru, that's what I mean by doing that, right? Is that when you're trading that, you just want to, for me personally, I'm also, okay, I want to trade with the trend. So if I'm trading with the trend on the daily chart, but then suddenly I see on the weekly chart that we're just this upward movement is just one big major lower, could be one big major lower high. Therefore, it's a lower probability trade for me, because that big long-term weekly trend is actually key, as I was sharing with through a session through Bitcoin and all these other charts. Does that make sense, Manaru, what I'm saying here? because that's how you combine the different time frame charts. If say for example the short-term Bitcoin movement up just recently, how you combine this, okay, this is what's happening short term. So it may be very short-lived because that weekly chart is still making those lower highs, and vice versa. The short-term downward movement we had with the currencies, and everyone else that's listening right now, can you guys give me a yes in the chat box if that makes sense? How you combine the different time frames. So if I look at say Dow Jones, right? I can see Dow Jones. What was Dow Jones doing on the daily charts? It was actually making lower highs, lower highs, lower highs, right? It was making lower highs all the way down. So if it was making lower highs and lower highs all the way down, hang on a minute, but therefore the sellers might be coming in control. What is the weekly chart saying? Oh, the weekly chart's saying we're still making higher lows. So therefore that short-term little pullback is likely to be very, very short-lived. I hope that makes sense, Manaru, and everyone else listening right now. And that's how you combine the time frames. If you're looking for a high probability trade, I'm always looking for setups, and I'm always looking for trades to trade with that trend. Because if I know that weekly trend is where basically the weekly trend is the big footprint. I use the daily and the hatch hour for analyzing the chart, and my entries on the 1 hour. What do you think about it? Is that okay? Well, firstly, you're asking me, is that okay? I don't know your system. You could be a short-term scalping system. You could be a long-term like I don't know your system at all. So it's a very blatant statement. What I can say is you need to simplify it even more. So if you're using the 1 hour, as your entry, then only use the daily. I would say use the daily as your analysis. And if your daily is if your hourly is setting up, but the daily is saying, again, it all comes back down to your system. All right, it really does. It all comes back down to your system. What are you most comfortable with, and also what for you has tested to be okay, or tested to be good? Because I don't know what sort of system you're using, I don't know what sort of rules you're using, and so on and so forth. But for probability perspective, if you're trading the 1 hour, make sure you're trading with that daily trend. If you trade the daily chart, make sure you're trading with that weekly trend. It's just a probability game, that's all. So you want to really keep it simple there. I don't think we need to use the 4 hour. Just make sure you just keep it really simple. If you're looking for setups on the hourly chart, then use the daily chart for that trend. Now that looks like it's a short-term swing trading, right? Because if you're long-term swing trading, you'll be looking for entries based on the weekly and daily, or if you're looking for entries based on the hourly and daily, you might be looking for a couple of day move or entire. So, but again, it just depends on what sort of setups. At the end of the day, the question you got to ask yourself is that the system I'm using right now, have I back tested it, and do I believe in it? What's the average win-loss ratio, and so on and so forth. So due to the fact that you're asking me what I think about that, tells me that you really haven't done any testing, extensive testing, to say, okay, this is the exact setup I'm looking for, because I know exactly what the setup I'm looking for on the daily chart. I know the exact rules. I know the exact setup I'm looking for. Then all I do is I make sure I look for when I have those exact rules on the daily chart, all I do is I look for the weekly chart to make sure, one, I'm trading with the weekly chart. And secondly, that there's no major areas of resistance or support there, because that's likely to lower my success rate, even if I am trading with the weekly chart. If I have a good bullish signal on the daily chart and it meets my rules, and I go to the weekly chart and we're still making higher lows, and there's a big bull market there, but there's a lot of resistance where my entry signal is, I won't take that trade because there's a lower probability trade. But that's just my rules. I'm trying to increase my probability even more. And I've noticed more times than not that if there's a lot of weekly or support or resistance through there, and it's testing that at the time, like we're getting right now in the Dow Jones, then that's a lower probability trade that would now likely to follow through. Again, I use that. That's how I read the weekly chart. Trading with the weekly chart trend, and if there's any major areas of support or resistance that the market's had problems in the past. Fantastic, fantastic, Manuro. Fantastic. That's great. So, all right, guys. Well, almost gone for an hour and a half in this session. Hour and a half. Well, anyway, guys, I wanted this session because today I wanted to start your week off right by teaching you some foundational stuff to help you when it comes to reading and trading the markets and to help you have the on side. And hopefully I've saved you guys a lot of money when it comes to trying to buy silver and gold or trying to get into the crypto market and so on and so forth. And moving forward, hopefully you're not going to have that FOMO. Hopefully you're going to realize that you're not going to try and pick the bottom, because trying to pick the bottom is actually a losing strategy. Hopefully my goal for this one here is to give you a bit more odds and a bit more advantage on your side. So thank you so much, guys, for being here today. For you guys that are watching the replay, leave a comment below and let me know what you thought about this. Again, it's almost an hour and a half training for you guys, and I hope you guys really, really enjoyed this. If you guys did enjoy this, leave a comment below on the video, and give it a thumbs up. Share this out to people that you think is going to help them out as well too, because hey, it helps me out. And as always, guys, if you haven't grabbed the free trading course yet, then go grab it. It's about 10 videos long, 12 videos long, because I've got a couple of bonus videos. Go to freewbstraining.com to grab your free complete trading course. Well, I talk a lot about this and a lot of other things as well too. So anyway, guys, have an amazing day, and I'll see you next time.